Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Kurt Carlson. How you doing today, Kurt?
So far, so good.
Good, good. Well, we brought Kurt on. We haven't talked about real estate in a while, but we really wanted to dive right in here because there's a lot going on in the real estate market. Kurt, tell us a little bit about your background before we begin.
I've been doing this for nearly 20 years. We started a marketplace for real estate investors to find houses that they can rehab. Before that, I was in a similar role, organizing sort of SFR assets before anybody else was. It was a very small industry back then. Obviously, that all changed in 2008, which was pretty disruptive. Before that, we did some real estate in the Caribbean of all places, but I'm originally from Minnesota now, full on 100% Texan.
Nice. So you said you have a marketplace for real estate to rehab. How's that different from like just the typical MLS directory? What are you guys doing different?
So we realized this in 2008. There was more inefficiency in the market, in the housing market, than we'll ever see. We'll never see those times again. But we realized very quickly that the MLS was a traditional marketplace for traditional buyers. If you're a real estate investor, and we can talk a little bit about who these people are today, because I think the view of the real estate investor is inaccurate, most people's expectation. But the people today, when they come in, they don't really know where to look. The MLS is a very inefficient marketplace when it comes to value add homes that a real estate investor would like to purchase. And there's not a lot of other good alternatives, but top of mind, everybody just thinks go to a realtor and that realtor will go to MLS, and there's really nowhere else to go unless you're, knocking on abandoned homes or, putting your business card in the doors. It's very hard to find these types of assets. That's where we cut our teeth.
So I mean, if somebody found a good deal, why would they put it on the marketplace? Why don't they just take it themselves?
Well, because the deals are hard to find. So they don't know where to start. So there's 15 million vacant homes in the United States today, and they're incredibly hard to uncover. So everybody top of mind just thinks we're going to go to the MLS, but the primary focus of our company is just finding those assets. We're very good at it. We use some data analytics and other techniques, but once we get to a certain size in a market, everybody just kind of understands we're the marketplace, and they bring us the assets to sell them on our marketplace. So you would think of us almost like an MLS for real estate investors, where we specifically curate value add properties, the kind of properties a real estate investor could acquire, add some value, rehab, put back on the market, or keep as a rental.
So yeah, I guess the nature of my question was this. I mean, if you look at like MLS, that is the quote unquote market price for retail, homeowners. There's certainly some investors on there, but it's mostly, overpriced stuff. When you have a marketplace of buyers and sellers, there has to be a clearing price. There has to be a price where they're willing to agree. I guess my question is why would somebody, presumably investors are going to get a better deal? Why wouldn't somebody just go to MLS if they're getting a higher price than on your marketplace, where I would imagine real estate investors want a better deal than that? So there's maybe a bigger spread in the buyers and sellers, I guess is where I'm going with this.
Everybody thinks about real estate as if it's a commodity, it's a fixed asset, because we're used to seeing SFR like that. We're used to seeing a finished product on the MLS. It's got a set value, right? Where these properties, you've got to think a little further up the supply chain, where these are value add properties. There's something that needs to be done. So these properties do not command the highest value on the MLS. If you have individuals, everybody thinks they want to buy a fixer-upper until they get the inspection back, and then they back out of it, right? So that experience happens time and time again with these types of assets on the MLS, which drives down the value when it keeps coming back to market. The viewers on the MLS, the buyers on the MLS, they'll look at these properties and they see all these issues as problems, where a real estate investor will really see them as an opportunity to fix it up, make it the design elements they can put into something like this, just like sweat equity, right? They're improving the value of the property. We've proven that the MLS is not the most efficient marketplace and doesn't command the highest value for these types of properties. And we do it every day because we buy assets off the MLS and we resell it on our marketplace. It's a challenging customer experience for the investor and also for the seller when it's a distressed property on the MLS. Realtors don't generally want to list these types of properties on the MLS. They don't want to, deal with inspection issues or have to hire contractors to get properties ready for the MLS. The realtor becomes a project manager. It's not what their skill set is. It's not what they're good at. We have a tremendous amount of inventory from realtors where they don't want to list it on the MLS. They bring it to our marketplace because they know that they're going to have buyers that see all the problems with the property as an opportunity. And they know it's going to sell in a day. And it won't have to be this project that they spend 100 hours on with contractors, where the likelihood of that, when you're dealing with traditional home buyers and contractors and realtors, is not a happy experience at the end of the day for the seller.
So, given that you're dealing with homes that need work, um, what is a good experience for people like that?
Um, Generally what we've experienced now, some people, think about it. There's 15 million vacant homes in the US, and this is this continuum. That pool of vacant homes is always being added to as people pass away, as people go through situations. A typical example is like, imagine you're in Boston and you're very busy. You're working 60 hours a week to keep up with inflation or whatever it is. And you inherit a home in Arkansas, right? And it's a rental from some relative or something like that. You just don't even know where to start if you're just an average individual that doesn't understand, real estate or even being a landlord. And imagine that property is in distress, or maybe there was a fire or something like that. These situations happen constantly in the US. Um, and and that's when somebody just says, I'm not going to hire a realtor. I'm not going to hire a contractor in Arkansas. I'm not going to do these things. I just need this asset gone. But if they went through that process to hire a contractor and a realtor in another state, you could imagine they're going to pay 4 or 5 times more for those services than a local real estate investor. So that's a huge problem for that seller, but for a local real estate investor, that's a huge opportunity. And where they unlock real value is not because they're buying significantly under market value. They're unlocking value, that real estate investor, because they have a team of contractors that they can manage very closely. They can get that work done for a lot less. They have better design skills, and they can create value in that asset. So it's a win-win, really. The seller generally, in most of these transactions, can come out ahead financially versus if they just took on that project themselves. They don't have the skills or often the desire.
Yeah. Yeah, that makes a lot of sense. Well, I'm curious, the housing market's been kind of a mess for a while. And, we do a lot with private mortgages, so I see that side of it a lot, and I see the supply and demand from that side. Um, and that actually became a problem more like right around 2018. It was even before COVID. COVID made it worse. Um, so much so that, back in say 2008, 9, 10, 11, 12, we were seeing hundreds and hundreds of notes, with no problem, more notes than we had people interested in investing in them. And now we're lucky if we see a few a year that are good. I mean, I'm talking about quality. There's plenty of volume, but like actually quality stuff. And it's just the market has changed so much on the paper side. But on the real estate side, I'm curious, um, what are you seeing, and what is going to actually change that? Because I know there's a discrepancy in buyers and sellers right now in overall, but what are you seeing in the data right now?
Well, 2008, we had distressed sellers, right? Today, we have distressed properties. There's $30 trillion worth of equity today. So you don't see a lot of distress in the seller situation or in the financial side. That's not where the problem is. So that's why you won't see notes. You won't see an uptick in foreclosures. I mean, they'll be able to offload assets before it gets to that. Nobody's upside down today for the most part, but we have an aging housing stock. We're in so much trouble right now in the US in regards to housing. We just haven't built anything since 2008. And that situation is getting worse. I think we're going to build, I think we're going to, I think there will be housing starts, but I think we're actually going to deliver between 400 and 600,000 homes this year. It's absurd. There's 130 million families in the US. That continues to grow, but the housing is not there for them. And that's for a lot of different reasons, right? But it's not getting any better. We built more homes in 1992 than we did last year. So I think a lot of these government programs are kind of a band-aid, but have some, problematic long-term effects like down payment assistance. They just add additional demand or pressure on affordable housing. But there's a whole topic we can get into around affordable housing and why we need to really have our focus there. But as far as the data and what we're seeing, it's just we just don't see the distress on the seller side. We just see the distress on the actual asset. And we've been focused on creating a better customer experience and more streamlined process so those assets can really find the right buyer, because that doesn't exist today outside of what we're doing, not in a scalable fashion.
I mean, what do you see that's going to actually change all that? Because I've been hearing this for the last few years. There's not enough houses, not enough houses, and obviously there's enough place for people to live because there's no caravans of people who are unhoused. But what do you see that's actually going to change the environment? Because if what you're saying is true and it's getting worse and worse, and to buy a house, it certainly is. What would actually change that? I mean, why aren't builders building right now? If there's so much of a need, why aren't people building?
There's a lot of reasons why it's been challenging for builders. Now, builders, it's obviously they've got to forecast pretty far out in the future, right? When they do this, they're worried about rates. We've become so accustomed to this dynamic fluidity where everything is constantly changing. It's a very challenging environment for large scale builder. Now, there's some solutions out there, but they're not good ones. This is a real infrastructure housing issue that we have in the US. You think about bridges and roads and things like that when you think about infrastructure, but there's just not enough homes. And the government can't fix this. And we can go through some of the proposed proposals there. And the builders aren't going to be able to fix it. And I think the best solution there, which is going to take time, and we're going to be dealing with these issues for decades, is the local real estate investor. And I can unpack that a little bit, but this is very much more like a all boats to Dunkirk kind of situation. Real estate, it's hyper local, right? A home is like we were talking before, everybody thinks a home is this finished product, but the reality is it's a non-fungible asset. They're different. This is not there's a limited amount of data that you can look at because the transactions are so large and so infrequent, becoming more and more infrequent and becoming more and more off market as well right now, which is a whole nother thing that we can discuss. Big trend there. But I think if you look at what we're dealing with right now, and some of the solutions that have come from government, we've got public lands, but they're often in areas where we don't really need housing, right? Where we don't have affordability issues. 25% of the cost to build a home today is regulatory costs. So you can try to fix that. You can mandate some things on a federal level, but this happens at the local municipality level, which can get very confusing and is hyper fragmented as well. So those are very challenging problems to solve. But we have 15 million vacant homes today, ironically. So what we've been focused on is just identifying the vacant homes that need work, that we can be returned to market, and we actually create net new inventory just through basically pointing a real estate investor towards the next project that they should fix up. The majority of those assets are rehabbed and returned to market. So the only thing that will really fix our problem is additional inventory. That is just the big solution that we have. And that's how we found we can find that additional inventory. It's with that, just being more efficient and better at finding those those assets that are vacant and returning them to market.
Yeah, I mean that's great. I mean that definitely can solve some of the solutions, but I guess where my head is I mean the real estate market, like every other market, is supply and demand driven, as everyone keeps saying. I was on the assumption when rates went up a few years ago that it was interest rate driven because it always has been in the past, and this time it wasn't. And I call myself out on being wrong on that, and it to me it didn't make sense. But it is still if it is supply and demand driven, like everyone's saying, then supply and demand should solve the problem. So why is it not being solved on a supply and demand driven level if that is what's driving the market right now? Like why isn't it fixing itself?
It is a supply and demand problem. We don't have the supply, and the supply is very challenging to deliver. But
But
the
if
demand,
there's profit to be made, people would do it. That's my point. So like why aren't people doing that?
it's just a challenging thing for builders to do. You would think they would, but they have so much. I mean, look at what's happened yesterday with the tariffs. I mean, lumber costs are going to go through the roof. So houses have become they're not affordable. Um, the builders can't just make them affordable. They have fixed costs. 25% of it is regulatory. We've had tons of issues, from supply chain issues to now tariffs when it comes to just the raw supplies. We've lost trades in that space since 2008. We stopped building, and those trades take a long time to deliver. Uh, Land cost is prohibitive in the areas that we actually need homes. The cost of a new home is just it's exorbitant. You can't deliver the inventory that we need, which is the affordable inventory. Builders can't build $250,000, $280,000 houses. They can do it, where land is cheap and where from a regulatory aspect, it's easy for them to do that. You see these build to rent communities popping up, a lot of demand for that, but those are not in the areas you don't have those in Boston, right? Where you actually need to reduce housing costs.
Well, Boston's an interesting area because there's tons of money here. So yeah, I've always wondered why prices keep going higher. And I see this home that looks like $1 million home, and it's really priced at 2 million. It's because there's enough people willing to pay. So it's and I can't speak for all parts of the country, just speak for my own because I live here. Is that the issue isn't that it's unaffordable. The issue is that everyone's got so much money that it keeps driving the prices up. Even during 2008, 9, and 10, the prices dropped, I think, maybe 7% in most through that whole time, where other parts of the country was down like 70%, 50% when it was just like abysmal. And here it was a blip because people just have money. It's a well-diversified economy. We have every sector. We have government money. We have research money. We have education. We have everything. It's the most diverse city economically in the country, in my opinion, which is why it's so well insulated. But my point is we have money pushing prices up, so it's unaffordable for most people. But there's places where people live. It just may not be where you want to live. But you can. There's always places around. You just may not want to live there. And I imagine it's the same with other communities. But I don't know other parts of the country like I know this, and that's kind of my point. Is that I know people have money, so they're willing to pay it. And if you don't have the money, you move. You go somewhere else. You go to further out of the city. You go Western Mass. You go to another state. Um, but I do know that there's plenty of money, so it's not an issue. Like I get the supply and demand dynamics. What I don't understand is the um, in other cities why prices are so high. The people aren't buying them. People aren't willing to drop the price, but they can't buy them, so you don't have a clearing price. So I guess my point is if it comes down to supply and demand, it to me it seems like there's a piece missing here which doesn't make sense. And I'm
I'll
not.
explain what that piece is, I guess. So if you can't deliver a $250,000 house in an area that really needs that has the highest demand, right?
Yeah.
Can't do that today. So what we've seen over time, so we have 200,000 investors on our marketplace right now that we've met with, we've onboarded them, we interact with them quite a bit on the marketplace. 12 months ago, that was 150,000. So we've seen this huge influx. Now, maybe you can start to draw that back to this great resignation, right? People are looking for, they're maybe following some side hustle into the space and they're doing that. But generally, you have these corporate refugees. They made good money, they had good management skills. They're not what you think of when you think of a house flipper, right? But there's this vacuum drawing people into that space. And what they're identifying vacant inventory because you can't deliver this inventory, you can't build this inventory, but the houses are there, right? I mean, there's 4,200 major residential streets in Dallas, and we've touched almost half of them. I mean, almost half of every street in Dallas, we've found at least one house, that was vacant, got it in the hands of a real estate investor that returned it to market. So I think that missing piece that you're talking about, that vacuum that you would expect to be kind of drawn into this space, is happening. It's so fragmented, it's so misunderstood, people aren't seeing it. Out of all the homes, one out of every 5 homes sold in the United States is sold to a real estate investor. Did you know that? I mean, that's a enormous market. It's 1 million transactions. 92% of those transactions are purchased by individuals that will trade less than 10 homes a year. So it's not like, you watch the news and it's an easy, ratings button for a politician to talk about Wall Street coming into our space and all this, but these are small business operators. These are corporate refugees that have been drawn into the space because there's a demand. The demand far outstrips the supply, specifically for this affordable category. Below 400, I think, is what you would call that. The sweet spot is really this like 280 kind of range.
So let me ask you this, because I know I've been hearing a lot in the news, but like private equity and some of these big financial companies going in and buying up like just huge swaths of properties. It's hard to tell whether they're doing that, for their corporate institutional clients or whether they're trying to manipulate the market. But what do you think of that? How is that changing the market dynamics, and is it a good or bad thing that they're there?
That's all fairly paused right now. It's kind of a nothing burger, I guess, is what it's kind of become. Now, it was very exciting in the beginning because you took an asset class, one of the biggest asset classes in the country, and if for the first time it went from private to public. It's publicly traded REITs now, with SFR, and it went from local to national, right? You can manage this on a national level. That had never happened before. It was all mom and pop landlords before that. So that was exciting. That absorbed a lot of the news. But those guys have really backed out. The rate environment has caused that. They were securitizing, obviously, that's in flux right now. So that's been really on hold. Those guys have dropped to almost a standstill in that space. A lot of them have actually moved their attention to build-to-rent communities where they're teaming up with a Lennar, and they're building an entire community a little bit up farther outside, like these communities you were saying, you just got to drive until you can afford the house. And they're building affordable rent-to-own SFR because people want to live in houses. They don't want to live in apartments when they have families. There's a demand for SFR, and they're driving these guys into these rental communities. So they've shifted really buying in our neighborhoods, which was looked at as taking opportunity away from a homeowner, into building new inventory in areas where they can build, which is having a positive effect on the supply. It's just, the areas that desperately need affordability are not being affected.
Yeah. What So, we have a new president and one who has a background in building. And it's only a month in, so it's still fresh. He's he's doing a lot in the first month, but this has not been one of the things he's gotten to. But you have somebody with a background in this, and let's say he could do something. He could say, make an executive order and say, we're going to do this. It's going to fix the market. Is there something that he could do to fix this problem, this housing problem that we have?
100%. I think there's so much going on right now. It's going to be hard to keep attention on this. I think we've got the right mind in office to understand this and what we need. I don't think it'll be this year or next. I think it's going to be farther down because of everything else that we have to deal with right now with a war and everything else. But I think the solution that we would look for, which makes a lot of sense, is a tax incentive for independent real estate investors to acquire vacant inventory and return it to market. And I'll explain why that's so important. So there's a lot of these areas that really need this revitalization, this activity, but people are scared of these areas. Nobody's interacting in them. There's really no investment. And I mean, it's like New York City in the 80s when you're building the first,
Yeah.
That's the spark that lights the chain reaction that causes revitalization to happen in those areas. So think about neighborhoods that have lower priced inventory, but nobody wants to touch it. And it just takes a brave few, right? You get 3, 4 rehabs going on in there. You start to develop it. Others follow. You start to have comps where you can justify the value of going in and rehabbing additional houses. And then that creates a chain reaction. I've seen it happen on a municipal level where the government will go in and buy a couple homes and do this, and it works. And I think if you could just give investors enough of an incentive, independent, local, small business investors, not Wall Street. Wall Street can't do this. But if you can find these guys and give them the incentive to go into these areas and give them a tax break for the proceeds, you might be able to swing it just far enough where they'll actually work in these areas. And you can narrow it to specific areas, kind of like what we've done with opportunity zones or certain price points. And I think that would solve the problem. I mean, if you want a viral fix, that would be it. Let small business work it out. And that would be something that would catch fire, would work, and would solve the problem to the degree that the government and the HUD or builders wouldn't be able to touch.
Yeah, the opportunity zones was a really interesting idea, and it was bipartisan too, which made it most interesting. But yeah, that was a fantastic idea. I mean, I don't know, have they re-upped it? I know they were talking about it and extending it, but I wonder why they wouldn't do more of that or expand it into maybe other areas that aren't necessarily the most needed. I don't know. I don't know your thoughts on that.
Opportunity zones weren't as clear. They were confusing. They weren't as popular. They weren't utilized to the degree that they could have been had it been a simpler program. I don't think that they had huge census tracts. I mean, there's opportunity zones on Lake Travis and outside Austin, Texas. It's
So that's
so
up to the state, though. I mean, the state determines that.
so I think it didn't get the use maybe it could have if it was put together a little bit different. But it was interesting. And it was certainly made for the same purposes. You go into areas that need investment, and it drove some investment to those markets, to those areas.
Um, all right. So I guess as we kind of wrap it up here, what are some final thoughts you can leave us with, in terms of the marketplace and where opportunities are, and what can people take away from this that they can apply right away?
I think the prospect of becoming a real estate investor is becoming very realistic. I think people think this is like they see all these gurus where they join a club and they show them how easy it is, but it's very different. So the real estate investor today, like I mentioned, is kind of this corporate refugee that had real management skills, can manage contractors. That's where you make all your money. And can come in, and it's a little bit of a passion project, right? Or a passion product, right? You go in, they like the design elements, but there's opportunity. I mean, these real estate investors, if they stick to it, it's challenging, but if you learn how to find the properties, you assemble the right team, you do this. I mean, a lot of these guys, they're small businesses. It's hard to scale really big, but if you're looking for an income, generally, I mean, they get up to doing, making $75,000 a rehab in net profits. And if they can do that 3 times a month, which is realistic, once they get up to scale, it's good income. And generally, these guys will look at this like an income, that it's a way to be more autonomous, to kind of leave the corporate rat race. But also, well, you see a lot of these guys, maybe they'll do 3 that are rehabs and they'll keep the 4th, and that's kind of like their 401k. So finding these assets, real estate investing in 2008, I kind of threw away the playbook that we had and we had to rewrite it. But now it's about finding an asset that needs work, that has some value add and creating that value, right? There's a lot of opportunities like that. Half of the homes in the United States need work. Lots of them are vacant. And if you can find that, you can immediately create a tremendous amount of equity, immediately create positive cash flow, and you can create a really nice portfolio doing that while you have these nice incomes using the same skill set to rehab these houses. So I think the picture of who a real estate investor is has certainly changed and it's become a lot more accessible. And we're seeing tremendous amount of people kind of being drawn into this space. There's just a vacuum there because of the demand for these types of assets. And that's really the only way at scale to deliver it.
Nice. Well, I appreciate you coming on the show here, Kurt. This has been really insightful. Where can people find more about you?
You can go to newwestern.com. Just think of old Western, but New Western. And that's really our website. That's our marketplace. That's where you can go to learn and to get started.
Awesome. Well, we really appreciate you coming on, Kurt. I highly recommend people check this out. I know, the the real estate market's kind of been a mess, and I'm hoping we take advantage of these opportunities while they still exist. So thank you for coming on the show.
Appreciate you. Thank you. It's been a pleasure.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. I mean, like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right, that was a great interview with Kurt. Really appreciate him coming to the show. Now we're into the panel portion of the show where we have our very own Barb Freeberg.
Hi, Kurt. Happy to be here.
Great to have you on, and that's it for this week. It's just me and Barb. So
Oh boy,
yeah,
more
so
talking for me.
there's no room. Barb's enough for all of us, so we're good. So Barb, what were some of your takeaways from the interview?
Well, I've got a long history with real estate rehab, and actually, that was my family business when I was growing up. So I was exposed to it very early. I got into it myself. I did some fixers and flippers, and I grew up in Ohio and now living in California. And seeing how the real estate market has changed over the last decades makes me wonder how viable it is to be able to afford to do fix and flip in many, many areas. Now, some areas may be more accessible because the cost of land and the cost of buying a property is cheaper and maybe the cost of labor is cheaper. But in the major markets where I live, and I think where you live as well, Kirk, on both ends of the coast, I don't know how, it doesn't make sense to get in there and think that you're gonna, buy a house for, on sale for $800,000, put in $200,000 and then sell it for 1.5. I mean, who even has that kind of money to play with?
Well, in Massachusetts, a lot of people apparently, because Massachusetts people buy for appreciation, they don't buy for cash flow because you can't buy for cash flow. I think what's interesting is I kind of harken back. You mentioned when you were growing up, you did some fix and flips with the family. I remember when I was first out of college, just learning as much as I could. I bought Carlton Sheets course, how to buy property with no money down, I think it was called. There was a Albert Lowry. I remember, I think he back in the 80s, 90s did some stunt where he'd say take any investor from any part of the country and could have him buy a property for zero money down. And apparently he found a guy who I happened to meet in Massachusetts, and he's like, "You cannot do it in Massachusetts." And he's like, "Oh, I'll do it," and he couldn't do it in Massachusetts. Every other place is fine, couldn't do it in Mass. And Massachusetts is kind of this weird area where um, everything's expensive. People have lots of money. There's tons of real estate people here trying to make it work, and I find it fascinating. I mean, in my neighborhood, and I live in a nice neighborhood, and there's these huge homes and expensive homes, and they have, they're tearing down homes and building up multi-million-dollar homes, and they're selling them. It's ridiculous, and they're making money. We know some of the developers around here because one of them actually works right next door to our office, so we talk to him a lot, and he's like, I'm sitting on piles of cash right now because I can't put it to work. I can't make a buck because they've got certain margins that if it's below a certain margin, they won't do the deal. And he's like, there's one or two people in our area, and they have like a 5 or 6 town area, I think they work in. And he's like, we got one or two people in our area who are doing fix and flips, and the margins are atrocious. And we can't make money on the deal. It's like a 5 to 7% margin, which is basically if you screw up at all, you're losing money. And he's like, these people are doing these deals and we're not. We're just going to sit on our cash and we're just going to wait because they'll eventually get blown up and, we'll be able to do deals again. But the spreads on these things are so narrow in mass. I mean, I talked to an institutional guy who was buying commercial buildings in Boston years ago. This is years ago. This is like maybe 10 years ago. And their cap rate was 2. Yeah, they were buying
How do
institutional
you
buildings.
operate on that? I mean, there's
Don't
like
know.
no room for any mistakes. I would never take a deal like that. Never.
Yeah, I mean, I never take a deal. Like I'm laughing at the fact that somebody would even consider it. I mean, and they're institutional investors, which means it's not their money, but it's, 2%. I don't know how they make money. I don't know how they make a profit on that. And on top of, and their justification is, well, you know, you're getting zero on treasuries. I'm like, yeah, with no risk. Like you're you're asking for 2 with risk. I mean, and now of course with office markets a mess. I'm sure they're all losing money. But that's why you don't do stupid deals because all it takes is a turn in the market, or in some cases, the market to stop going up. Even if it just goes sideways, the expectation is it keeps going up. Remember 2008, Barb? Uh, real estate just keeps going higher. Then nothing happens to real estate. That was their assumption they built into their models, which caused the whole global financial system to implode because the models were based on real estate just keeps going up. So,
Well, and that, fortunately for me, because that was the time that my husband got a job in California. And we were living in Pennsylvania at the time, central Pennsylvania, Hershey. Beautiful area, reasonable cost of living. And he got a job in Northern California. And we're like, maybe we could sell our house for $250,000, give or take. And it's like, what is it going to cost to move here? And fortunately, because of the tremendous real estate crash, we were able to buy a house in California, which was still, in my mind, a lot of money. Even though the property that we are still in had dropped probably 40% from its high, we bit the bullet, we bought it, and otherwise we never could have afforded it. And then over time, of course, when the market came back, it appreciated, handsomely. But the point being, Kurt, that real estate has ebbs and flows, but it's not like the stock market where, every 5, 6 years, you'll usually get a really nice drop and you can get in, you can buy some bargains. Real estate is a different market and it goes at a different pace. And my experience is the ups and downs are further apart. And so if you want to get into real estate investing, my advice is you have to go to a place where it's affordable to buy a house, where labor or an apartment or whatever you want to invest in, and you can get labor that is affordable. As a side note, I was looking to hire a handyman to do some work on our sprinkler system. And, I figured what, $50 an hour makes sense? He's like, oh, my minimum is $200 and I charge $100 an hour. And I'm like, really? But I get it because if you want to live in Northern California, everything's so expensive, you have to charge a lot.
Yeah, we have the same problem here in Boston too. The costs of, if you think about some of these shows, like I remember back in the day, was it early 2000s when they came out with these fix and flip shows. Remember these, Barb? Um, I forget the guy's
Of
name.
course, I still love to watch them, but they are not realistic.
Yeah, the first one I saw, there were a few. There were like two or three guys that I saw. One was this guy down in Texas. I remember watching Than Merrill. I forget the name of the show. The guy from Yale and had his buddies that were like it was just like it was actually a funny show to watch. They go into these places in like New Haven, Connecticut, and I know Connecticut because I went to school in Hartford. And it's a disaster zone. I mean, it is crack house. I remember going to when I was looking at colleges, I went down to see Yale just, and it was like basically saw like fraternity row, fraternity house, crack house, fraternity house, crack house, fraternity house, crack house, like legitimately a crack house. And I'm like, what the, like, why? I mean, it's complete. And then you have the other side. It's like beautiful campuses, but like right outside the campus, just like the college I went to, Trinity, like total disaster zone. Like people are shooting guns in this middle of the street, right across the street from the campus. Like, I mean, other parts of Connecticut are beautiful, but not in those cities. And anyway, so they did this show in the cities, and it was pretty interesting to watch. And they turned this into this like real estate empire, and they're selling, ice cubes to Eskimos and whatever. I won't get into that, but it was interesting to watch. And I think you could probably make it work in Connecticut, and you can make a lot of mistakes. You can't really do that in Mass. Maybe Western Mass. We do have some people we know that are doing this, but they have a very refined process. So in certain parts of the state, like not in the greater Boston area because it's too expensive, you can't make that work. But in Western Mass, like Worcester, Springfield, you could definitely find deals and you can make it work. The challenge, as you stated, Barb, is the labor, is you got to hire your own people because, I mean, ideally a full-time person you're just paying because if you're paying some of these labor rates, plus you got the cost of goods now is going up. Like I don't know how these people are making money right now. I know for whatever reason, we're seeing more activity right now, so they must be finding a way to make money. But I'm not sure how they're doing it because prices are not going up all that much in Mass outside of the Greater Boston area. Greater Boston area, they're still going up, but
Well, I
large parts of the
love to
country.
use this example because Detroit has gotten slammed over the years. I mean, when I was growing up, it was like a vibrant, auto town, tons of money, really nice neighborhoods, really bustling, impressive metropolis. But as all the plants closed, there became a lot of problems with Detroit, and they lost a lot of population, and a lot of properties went under and deteriorated. And talking about these TV shows, there's one something about the block where these guys take on a whole block and they'll buy a house because Detroit has a lot of programs to get these blighted houses up and running again, where you can get a house for like a dollar, $10,000, really, really cheap. And then you put in like $50,000, and so you've got 60,000 in, and then you can sell it for 150. Now, for many parts of the country, that sounds just insane, but that makes sense. You've got like a 40% margin, and they're small houses, and you can do, relatively a lot of them, and you can get a nice profit, and you're helping to revitalize a city. And so, someone who is flexible, who wants to get into this business, can go seek out the lower cost of living areas. And I think it is really viable to do fix and flip in those type of areas. But I don't see it here in Northern California, in Boston, in now, maybe if you go to like Central California where it's a lot cheaper, but then you've got to ask yourself, where's the demand? So, real estate and Kirk, I want you to talk about what your experience has been, um, just seeing the pricing of homes continue to go up as mortgage rates have gone up, which is so counter what typically happens, because typically as mortgage rates go up, housing prices will stabilize and maybe even decline, and we are not seeing that.
Yeah, I mean, what I'm seeing when I'm looking at stats around the country right now, I'm seeing that Boston is still relatively stable, which I would have expected. I mean, Boston, there's just tons of money, people with plenty of money. I mean, there's somebody in my street tore down their house and built up this like, three and a half, $4 million house. They have money. They don't care, like there's people around here that have money and it's just like, they got a bunch of stock options. Sure, I'll just, redo a house or whatever. So there's a lot of people around here with money, and I think the challenge is, I live in a town that has some of the best school systems in the country. Everybody wants to live here, and it's my kids go to private schools because I used to live in the city, and we just started in private schools, so we stayed. And I can tell you that what's interesting is people are really defensive about it around here. Like like my wife went out with a mom's get together, and one of the moms like, oh yeah, yeah, there's just my wife, and yeah, she sends her kids to private school, and one of the ladies pipes up, she's like, you don't think much of our school system here, do you? Like, this is why I don't like these areas, you get too many of those types. But the point being is there's a desire to live here. The school systems are considered really high end for public schools, and it's very competitive. I mean, I can tell you, it's crazy here. But um, the interesting thing is, if you look at certain parts of the country, because I've been watching this closely, because we want to buy a place. We used to own a place in the city. During COVID, we moved, we rented in the suburbs. We got out of the city because I knew it would be a disaster, and I'm glad we got out. I mean, the city, Boston's great, but I wouldn't want to live there anymore. It's just a different city now. It almost seems like hollowed out, and there's no personality like it used to have. So we're looking to move to the suburbs, but I realized like it's too expensive to buy. Like it's way too expensive. And I thought higher rates would lead to lower prices, which is typically how real estate works. But because of various reasons, some people call it supply and demand, that people have been on the show, they said supply and demand, it won't happen. I'm like, okay. I mean, apparently they're right because real estate keeps going up. I go to Zillow once in a while to look at houses, and every house has this thing, bump it along, 4%, 5% a year, bump it along. And then COVID hits, beep, like 30% rise, and then it's just kind of like hanging out up here. I'm like, that's not a real price, but yet people are still paying it. So technically, it is a real price. But I look at it, I'm like, it really should be down here. It should be like 20% lower. And I'm looking at that chart thinking, I'm not paying that price because as soon as I do, the real estate market's going to go down. I'm going to get stuck holding the bag. I know what's going to happen. I just know it. And but I think the reality is this: if you're looking to buy a home, there's nothing wrong with renting. By the way, we rent. We're fine with it, and I'm paying so much less than somebody who owns the same property. I'm okay with it. Um, but it's not for everybody. Some people just feel like they need to own a home and all that. The challenge is it's unaffordable for most people. The prices have gotten crazy. But if you look at owning a home, and a starter home is no longer affordable for most people unless you're living in a not a less than ideal place. Like when you're young, like when I graduated college, I wanted to live in the city where all the people were, where all the action is, wanted to meet some people, have friends. Like you just want to be around people. And when you get older, you kind of move out of the city. But the challenge is you can't afford as a young person to buy a home in the city anymore or the suburbs. It's too expensive. Like, you got $50,000 job, first job out of college, or maybe you get up to 100. You can't afford to buy a house on 100 grand. Like, it's crazy, you know? So, at least in Boston. Now, Boston's different economics. So, it's a question of where do you want to live? Do you want to keep up with the Joneses like everybody else? Like, there's a lot of open questions you have to kind of figure out. But I can say from an investing standpoint, I would never buy in mass. It is very renter friendly. The numbers don't work unless you're in the lower socioeconomic areas, which case they probably can work. But for the most part, the numbers don't work as an investor. Some states they do. Some states are investor friendly, and some states the numbers actually work. But you have to find those places. Like you said, like Hershey, Pennsylvania, beautiful area. I went there a few years ago. It's absolutely beautiful. Love the landscape. It's awesome. I mean, it's not as much to do there, but it's absolutely beautiful country. So it's just a preference of where you want to live. And you have areas like Florida and Texas that people from New York and California migrated to after COVID because their states were such a disaster that people were like, I'm out of here. I can't take this. So all those states, the prices boomed quickly, kind of like mass. But now they're starting to kind of like tail off because you had that bump of people, but now that influx is kind of tailing off, and now it's a different environment. So I would be shocked um, if real estate doesn't come off a little bit around the country. I don't think it's going to be a crash. I'm not seeing any indications of a structural crash that is pending. But I do think that prices should come off a little bit. I don't see any Wall Street problems. I don't see any banking problems. There's one or two banks that are in rough shape, but I don't think the Fed will let them fail, so I'm sure that'll be fine. Uh, so I don't really see any big problems for housing like we've seen in the past. Global financial crisis, you had the S&L crisis. Like there's been problems in the past where you've been able to take advantage of it, but I don't see any in our near future. I just see there being a disconnect between what people can afford and what the prices are. And the conversation my wife and I have all the time is like, are we going to get priced out at some point? Like that's a very real question. If we rent long enough, are we going to get priced out? Because most people, they build up equity in their house, right? You buy a house, you pay it off over time, and when you retire, you get all this equity. That was like the boomer thing to do. You have all this equity, now you can either downsize or do something else or live there. Um, but we've been out of the market for like 5 years. And like, are we going to get priced out? Can we afford to live here anymore? No, I have a business, so I don't really care. Like, we're building equity in the business, so the real estate doesn't, I don't need that. But but for most people, it's a real issue. Like, can we, if we don't buy in the next 3 years, are we going to be able to afford anything anywhere in this area? And at this rate, probably not. Like, that's how crazy the numbers are getting. So
But
what do most people do? You got to
but I think
move.
Well, but I think what you said, Kirk, is really valid. And as someone who has a long legacy of history within the markets, the real estate, the investment markets, scenarios wax and wane. And sometimes takes a while for a cycle. And I think at some point, first of all, you're building equity in your business and you're also building equity in your investments because you're in the investment markets. And so stocks have the stock market has gone up exponentially, very, very high. So any of you who have money in a 401k or an investment account, you've seen some pretty nice returns over the past 10 years or so. But to the point of, is there an entry point? I really believe at some point that markets are going to, they're going to drop. They're going to level off. They always do. You just don't know when, and can you afford to wait?
Yeah, and
And
I
the
think that's the real point.
Can
I
you
mean,
afford to wait? And the other thing is, as someone who has lived in, I think maybe 5 to 7 different parts of the country over my adult life, although some people are wedded to a certain area. You have a business in Boston, you're not going to move. But for those who have more flexibility, there are opportunities in other areas of the country. I just did a YouTube video on can I retire at 65 with $1 million? And in that video, I listed the 10 most affordable places to live in the country. And some of them you might say, oh, I'd never want to live there. But if you open your perspective up a little, and if you're looking for lifestyle, if you're looking for real estate investment opportunities, the broader your perspective is, the greater the amount of opportunities you will have.
yeah, and I think that's the key. I mean, I'm kind of an isolated case, but I'm bringing my experience in because I think what's important is that my challenges are as real as everybody else's. I just have a business, so I'm building up equity and investments. I'm not worried about it. But if you think about real estate, right, it goes up at let's say 4 or 5%, let's say 5% a year, and you got an 80/20, right? You're let's say 4 or 5% a year, you're looking at 20% return a year on leveraged equity. I mean, that's awesome, right? And so I'm trying to compete with that, right? Like that's what I'm competing with is I could own real estate and do that, which by the way, real estate, your personal residence is not an investment, but I'm just using this as a simple example. Um, but this is what people are doing. They're competing with that. And so if I didn't have a business, I'd be screwed. I'd have to go live somewhere else. I'd have to go live in another part of the state, which I may not want to live. It's less convenient to drive. I work virtually, but my wife drives into work, so she has to drive in the city. Where are we going to live? Like it's unaffordable. She's got to drive an hour to get in the city. That's no fun. So you have to. I think what the challenge is that the economics are lopsided as such that it's going to be uneconomical for most people to afford the places they want to live because I don't want to live on top of somebody else. Like I could find a place, but I don't want to live, I don't want to be able to look in my neighbor's window looking out my window. Like that's not what I want. I could definitely find a place to live. That's not hard. But the place that I want, like it used to be affordable. Now it's not. Now it's no longer affordable. And inflation's going to get worse. you know, I don't think a lot of people realize that inflation is has been really high, higher than they've certainly disclosed. Doug and I talk about that on Fridays. And I don't know if it's going to keep going at that rate, but if we have stagflation, we're all screwed. So what do? You have to prepare for all scenarios. Do I sit here with a bag of cash waiting to buy a property? Do I jump in and maybe it'll be the top and then I'll be stuck holding the bag, or do I wait and hope that I can buy it cheaper? It it's a question that is going around in my mind every single day, and I don't have an answer for it. But that's how I'm thinking about it. So how should other people be thinking about it? Well, you should realize like what is most important. Is it important? Do you have enough equity that you can invest and do other things with and grow it that way? Or does it have to be in, real estate? Real estate's a safe option for most people, but I think if you're in an area that is growing, like Boston is, and Texas and Florida, and there's certain parts that are growing. Like I think you can bank on appreciation, but I think you have to realize like what's most important. Is living in the right place the most important, or is uh, owning a place and growing equity most important? My opinion is, well, it's not my opinion, it's math, but your primary residence is not an investment. It's a personal expense. So what do you want to spend on your personal expense? I'm spending a lot less on my personal expense than other people because I don't own. I'm renting, and my house is cheaper. If I were to own this house, it would be probably 3 times more expensive. So, is that more important? I could take that money and do other things like go on more trips with the family. It's just a trade-off of figuring out like what's most important. Is experiences and lifestyle or stuff more important, or is having a big beautiful house that you're house poor more important? For some people, that is more important. That's okay. Um, but understanding that's really important. So I don't know what your thoughts are, Barb, but I think everyone's probably in the same boat unless you already own, in which case you're probably just not moving because it's easier.
Well, that, and also if you want to get into real estate investing, it is a viable option. You can do fix and flips. You can find undervalued real estate and invest in that and add value and resell it. It's a really viable, or hang on to it and rent it out. It is a really viable path to wealth building. But you have to find, you can't overpay for the property. It's kind of like investing in the stock market. There's tons of great stocks out there, but if you're paying too much for them, then you're not going to make any profit. You have to buy at a price where you have a margin that you can make a profit on, whether that be, and don't look to appreciation, because appreciation is uncertain if you are an investor. You have to pay a low enough amount. You have to improve the property at a reasonable enough cost so that either when you sell or when you rent it, you have some cushion built in so that you can afford to, to have something go wrong and still make money with the deal. So I'm a proponent of real estate investing. I love it. Could not find a way to do it in San Jose, California. Now I have a friend of mine who went to Sacramento, which is a more moderate area, and she did some real estate investing there. It's 2 hours from San Jose, so that's an option. But like Kirk said, also, it's all about your values. How do you want to make your investments? Where do you want to live? What do you want to have? And what do you want to sacrifice? So I'm Barbara Friedberg. You can find me on YouTube and also at Barbara Friedberg Personal Finance.
Yeah, so yeah, we can wrap it up here on that note. I think we've said everything there is to say. I think as investors, if you're looking to buy if you're on personal residence, certainly make sure you make a good decision. Don't do it because you're keeping up with the Joneses. That's how people get stuck holding the bag when the market turns. But find something that makes sense for you. If you're doing it for investment, make sure it works. Don't invest for appreciation, invest for income or cash flow. That's the only thing that matters because you can't predict appreciation, but you can predict cash flow. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.